Thank you, everybody. Thank you for tuning in. As you know, today's topic is GTA real estate market hitting up again, right? So as usual, I'll do my PowerPoint presentation followed by our expert panel's Q&A. We have Kishore, Bhavin, Amit, and Rajat are our mortgage brokers. Sandeep Chopra is our lawyer today, and Prasunji is our real estate planner. And then we have Mohit is financial advisor, and Mustafa is our accountant. So we have all the expert panel ready to go. So any questions you can ask later. So a quick disclaimer, as you know, we try our best to get all the information from the reliable sources, but we cannot guarantee its accuracy. So please take proper advice before taking any action. And next, let's start. So our agenda for today is we'll first discuss our TRREB July 2025 market report, which came out on August the 6th, about 10 days back. And then we'll also discuss what are the factors that are controlling the housing market, right? And then we'll also look into, is this real estate market heating up again? That's the topic of the day. So we'll discuss that topic, followed by GTA condo market outlook, as we have a lot of our clients who are um, condo investors or condo owners. So definitely there's a lot of interest in the condo sector. So we will definitely discuss that condo market outlook, and then we'll open our Q&A session. Now, let's look into our Toronto market report for July 2025. The big news is that we sold 6,100 homes this July as compared to 5,500 homes last year in July, which is a substantial 11% gain in the number of sales, right? So yes, if we look from June to July, it's about the same number of sales. We'll discuss that a little bit later. But this is the big news. That was a big headline going into all media, right? Now, this is how it looks like. This is our 10 years chart. If you look into this, now this dark green line, which is hovering here. So we are now at least sitting above last 3 or 4 years. So the number of sales, as you see, is now better than last 2, 3 years. Since 2021, we sold more homes in July. So that's the good news, right? Now, if we look into the months of supply, which is another big factor which we discuss always on our session. So months of supply means if there's no new home listed to sell, which means no semi-detached, detached condo or any other type of house comes to the market, how much time would it take for all the houses to sell? That's months of supply, which is a very good health measure for the market. So we are right now at 4.95 months of supply, which is a little bit under 5, which is a better than it used to be in June, but we are still about 14% more than July of last year. We still have a lot of inventory, right? It's a balanced side of the market. As I have mentioned many times, under 3 months is considered seller's market. From 4 to 6 months is considered balanced market. Anything above 6 months is complete buyer's market. We are still in a balanced sector for the months of supply. And keep in mind that's for all type of homes. We'll break it down a little bit later for house types. Now, this is what I mean months of supply or the supply. So if you look into the supply, this dark green line on the top is the supply for 2025. As you could see, as compared to all other years, we are having much more supply this year. And that's what the media was saying, that we have so many houses to sell and the houses are not moving and the market is sort of dead. Now, as you could see, this is actually now trending down, which is a good sign. So the number of homes available to sell is coming down. So the number of sales are going up and supply is coming down, which is going in the right direction, which means slowly but surely the market is returning back, right? So that's a good health measure for the market. Now, average sale price, which is another big thing everybody want to know, average sale price is still dropping. We dropped 5.5% as compared to July last year. Even as compared to June of this year, which means within the last 1 month, we are also almost 5% down. So the prices are still declining. But keep in mind, prices always is a trailing indicator. They always follow later. First, inventory always goes down, then prices goes up, right? So this is normally how it works out. Now, this is again the prices compared to last 10 years or so. If we look into this dark green line, we are still in the top 2, 3 years, even though we are down as compared to last year or the year before. Those were the when the prices were at the peak. We are still at a very healthy price. So if someone has bought a house from 2019, 2018, or even back, they're all laughing because they have bought at a very good price. Even now, the price is still very good, right? And slowly but surely, it will start going back, right? So that's the housing prices. Now, this is the average number of homes we are selling per month for the last 12 months. So this is like from August 2024 till July 2025, how many homes we have sold each month. Now, if you see August last year, we only sold about 5,000 or 5,100 homes, which means if we sell in next month even 5,500 homes, which probably we would have a big headline again saying that this month the market is up another 15% for a number of sales, right? So now also keep in mind number of sales are always seasonal. We always sell more homes in fall and in spring. So fall means September, October, November, right? So September last year was not very good, but October and November were excellent. We started actually coming back and we started saying the market is coming back very strongly, right? So October 2024, we sold about 6,800 homes. If we can break that record this year, which is a tough challenge, but if we can, then definitely I would be also calling it that, yes, we are back, right? So that's a couple of months to watch. Next couple of months will actually give us a very good trend or direction. Another point to note, normally spring market, which is actually March, April, May, are strong months, but this year, March, April, May were not that strong, right? And June or July are almost similar to or better than March, April, May, right? So, which means summer months, which are usually slower than spring, are actually holding us better. And we all know the reason why it happened or what's happening. But as I said, we just need to watch for next couple of months. Next thing we need to see is the pricing. So this is the pricing for the last 12 months. Again, we can see that the pricing are almost holding steady. They are going up or down about 4 5% either side. Yes, last year in August, the price was about 1,077,000. And right now we are at 1,050,000, which means we are about 2%, 3% lower than August last year, right? So we may go down a little bit further or we may come back next month, but overall, the pricings are holding more than 1,050,000. It went up. The highest price was again in October last year. Remember when I said we had a very strong market in October last year and we started feeling the market is coming back? That's when the average price actually went up to 1,150,000 almost, right? Now we are almost 100,000 below that, which is going to come back at some point of time, but average sale price is stable, right? Now, other factor, let's discuss microanalysis. The microanalysis means let's discuss the different type of homes. As you know, different types of homes behave differently and different locations behave differently. So one size cannot fit all, right? So keeping that in mind, detached houses in July, we sold about 2,800 homes. We had about 14,000 or 13,500 active listings. So, which puts us about 5 months of inventory, which is just under 5 months, which is, again, as I mentioned before, is still a balanced market. But semi-detached is the story. Semi-detached houses are under 3 months of inventory. We sold about 600 homes out of 1690, which is 2.8 months of inventory. Very healthy market, seller's market, right? So Sammys are still the story of the year. It did not go down too much, whereas townhouses are about 3.8 months of inventory, which is still in a balanced market, better than detached or condos. And the condos are, we all know, at this moment behaving the worst. They are about 7 months of inventory or 6.5 months of inventory. We sold about 15 or 1,600 condos out of 10,000. But if we compare this month's of inventory for condos as compared to condos inventory last month or the couple of months back, we are actually getting better. We were closer to 8 months of inventory. Now we are about 6.5 months of inventory. So it is also getting better. So that's point to be noted. Again, just quick recap. Detached about 5 months of inventory, semi-detached under 3 months of inventory, towns around 4 months of inventory, and condos are about 6.5 months of inventory, which means condos is still under very much buyer's market. Now, this is another thing we want to check under micro analysis, which areas or what towns are behaving better and what are behaving worst, right? So if you look into this reddish or orange zone, you would see for Brampton, we are 10% down year over year. So Brampton is actually getting the worst hit. We are 10% down in Brampton this year as compared to July of last year. Whereas Oakville is about the same, 9.5%, and Markham is about 8%. So, yes, these are areas which are getting worst impacted or most impacted. And what is almost stable is around Burlington or Vaughan or Richmond Hill. They are all under 2 to 3% of change, which is about the same, we can say. So this is how different neighborhoods are behaving differently. Overall, we are about 5% down in pricing year over year. Right. Now, let's look into what are the factors which are controlling the housing market. Before we discuss whether we are actually back or not into real estate, whether the real estate market is heating up or not, these are the factors which control the housing market. So as per Robert from BMO, three main factors play important role in the housing market. They control the pricing, they control the inventory. First one is economic and job conditions. We'll discuss that, right? Second factor is rates and the affordability. And third factor is the psychology. So these are the three main factors which determine where the market is heading to. So for economy, we all know we are not doing very well, right? And we all know the reason. I don't want to say that again, right? Our job number came back this last week, and we lost about 40,000 jobs in July as compared to June, right? So, but keep in mind, in June, we have actually gained about 83,000 jobs, right? So in June, we gained 83,000. In July, we lost about 40,000. We are not doing that bad, despite all the impact of tariffs and bad news coming from south of the border. We are still holding up very well, right? And this is the overall health, Canadian economic health right now. If you look into the job numbers or inflation numbers, we are about 1.9% in June, which is under 2%, which is Bank of Canada's mandate. They wanted to keep the inflation close to 2%. So we are very much in control of inflation. So no inflation at all. Unemployment is about 7%, which is about the same for last many months. GDP is 0.1% down, so which we can say is not that bad. Stock market is flat. So overall, if we look into this, we economic health is not that bad. It doesn't feel that bad, even though there is a lot of uncertainty, a lot of things are not in our control at this moment. We are dependent upon extrinsic factors, all right? But overall economic factors and job numbers are fair, right? Next factor, as we said, is the rates and the affordability. So this is Bank of Canada's rate. Now, Bank of Canada's rate could be in one of the three zones. It could be like supportive when it's under 2.25%, or it could be restrictive if it's more than 3.25%. So, as you all know, the Bank of Canada's rate were very much supportive for real estate market since 2007-8, right? Since that big recession that happened in US, our rates were always in the supportive zone. And that's why the real estate market had a very good bull run for last almost 15 to 20 years, or 15 years, I would say, right? Now, then for the last 2, 3 years, we were in restrictive zone when the Bank of Canada's rate were more than 4.5%, right? Now we are around 2.75%. That's Bank of Canada's rate as of today, which is definitely in the neutral zone. So Bank of Canada's rate is not supportive and not restrictive. It's neutral. It may come down further a couple of times when is everybody's guess that may actually support the market, and that actually controls the affordability, right? Now, other factor that will control affordability is number of jobs. We'll discuss that later on. Now, this is another factor, the third factor we called about the psychology. As per Robert, this is his quote, as the expectation of higher prices drove accelerating gains on the way up, the understanding that prices are falling is holding back buyers on the way down in some locations, which means the people are confused as they are feeling the prices may go up and they want to come back to the market, but then there's a lot of media news and a lot of people saying that prices are falling and they're holding people. So different locations are behaving differently, right? Now, one of the three things need to happen as per Robert for the market to become really strong. One, the rates to fall further, which may not happen. There are some banks are already calling that this year we may not even see any further drop. Some calling one or two max drops this year, right? And we'll ask our mortgage experts in the session down the line, what do they think, right? Please get ready. Next step, income growth. So income is stagnant. We are not having huge growths. Even if we grow at 5 or 6%, it takes time for the affordability to come back with the income growth alone. So, which means the only factor that can help the market to go strong is the house prices to fall further. Some markets have already done so. We are already at a very good pricing and the market is in an affordable zone and the buyers are comfortable coming back. Some markets are not and they may need to have some further correction. That's as per Robert from BMO, right? Now, let's discuss if the real estate market is now actually heating up again, right? These are the headlines. August 6th, when the report came out from TRREB that we had best July in the last 4 years, everybody started talking about it. Media actually gave it a big headline. This is a CBC headline, right? Similarly, yesterday, our Canadian Real Estate Association, Korea, they came out with their report, and that shows the similar sentiments all over Canada. So housing market is rebounding all over Canada in July, right? But the prices will spike soon. So prices will come back soon. That's as per global news. This is again another big headline. National home sales rise as long-awaited boost seems to have finally arrived. That's another headline from Bloomberg. Uh, this is again Canadian Real Estate Association news that the market is getting better and the pricing will actually follow. Right. Another headline, Canadian home sales rose 6.6% in July as compared to same time last year. CBC headline. So as I said, almost every media outlet, came out with now big news that the market is rebounding. Right. Now, the real estate market all over across Canada is showing recovery. So Ontario is still under pressure as per CTV. Now, lowest interest rates unlock the penthouse demand. Now, CTV is saying the interest rates have come down considerably, and that's actually helping the market. And that's why the market is going up. And also, RBC is predicting that the current rate of 2.75% is not going to change this year. And that's actually helping the market, not hurting the market. And let me explain why. People, when they feel or they think that the rates are going to drop more, they don't want to make decision. They want the rate to come down before they lock it, right? Many people think that as Bank of Canada rates changes, rates also changes simultaneously, which does not happen unless you are on a variable rate. And if you're on a variable rate, even if you take your mortgage today, if the tomorrow interest rate drops or the next month interest rate drops, you automatically get the benefit. But if you're on a fixed rate, if Bank of Canada is changing rate, your fixed rate doesn't change. Actually, in the last 2-3 months or last few months, the bond rate, which actually determine the fixed rates, have gone up. And that's why the interest rates have actually gone up in last quarter or couple of quarters as compared to coming down, right? So now, because the news is that there may not be much change, people have started accepting the fact that the Bank of Canada is going to hold somewhere closer to this rate for long. People have started coming back. So that's what is happening. Now, also RBC is saying that uh, our housing prices will not go up or down considerably in the next year or two. So they are hoping the housing prices may go down further by another 1% in 2025, which means it's flat, right? We have already come down almost 25-30% or 20-30% from the peak. If it goes down further by 1%, who cares, right? So the buyers are coming back. And in 2026, it may go down further, but another 1.5%. So which means overall, there's not much movement in pricing. And nationally, they are saying the rates will, or the bank house prices will change about 0.7%, which means now the RBC is predicting that the house prices are going to be stable, right? That's helping the market. TD, their economy. Oh, someone is unmuted. Let me try to mute everybody. Okay. So sorry about that. So TD economist Rishi Sondhi, now he is also, they are saying that the market is recovering, right? So in 2024, we saw significant interest rate drops, right? And that's now helping the market, and the market is coming back. And in the next quarter or next half of the year, there may be a little bit further drop, and that will actually support the market as per the TD, and the market will come back. So that's the TD report. Now, this is the housing prices all over Canada. If you look into this, as you see, the housing prices were at the peak in 2022. And after that, we have come down, but now we are hovering around the same. We go up a little bit, we'll come down a little bit. So the housing prices have stabilized. So keep in mind, is the housing market heating up again? I wouldn't say it's heating up, but it's coming back, right? Because Activity has started coming back and the prices are stabilized. Next, let's look into the condo market. Now, as I said, we have a lot of condos, investors, and condo unit owners in our database or in our clients, and also present on this call. So, condo market, condorum continues, right? The condo prices dropped about 6% year over year. And right now it's sitting at 685,000. Now, Urbanation, which normally looks into the new homes constructions as well as sales, as per Urbanation, we had seen 69% drop in condo sales this year, right? Which is the new condo sales. So new condo sales are down a lot, whereas resale condos are also down, but not that much. Now, RBC is highlighting that immigration is actually cooling down the condos. That's the primarily impact, which is controlling this market, right? And overall, the rents are also coming down because there's not much immigration and not many people coming up, because normally the new immigrants that they come to the country, they do rent for first 4 or 5 years, right? So these are the factors which are controlling the market, the condo market especially. Now, is it a cause of concern? Toronto condo units represent 60% of the total inventory in Toronto alone. So if we talk about Toronto, not GTA, in Toronto, what's the main inventory? 60% is condos. So unless condo market comes back, Toronto market would not come back, right? So that, keep in mind, condo market is a big factor, and there's a lot of pressure on this sector. Again, TD came out with a report where they said in 2024, from the peak of 2023, when the housing prices were at the most, in 22, 23, 23 alone, we came down 15 to 20%. And another 10% price declined in 2024, right? So which means we have already come down probably around 25 to 30%. Now there's not much change happening or going to happen. 2026 will actually see these fortunes reverse. And what are the main factors as per TD? One is again soft population growth, and then the elevated supply, and then the economics uncertainty. And why they are saying it will come back? Because of better economic growth again, as well as hopefully there will be some trade deal with US, and also keeping in mind there will be some population growth. So these are some graphs as per TD they come out with. So this is the graph showing that our pricing has been falling since 2023. This is when our pricing is falling every quarter, right? And this is showing the Q4 housing prices. They are saying it will again fall in 2025, but by 2026, the condo prices will start coming back. That's the forecast, right? The later part of this year will still see some significant drop in condo prices as per TD. But by next year, they will start coming back. Now, this is the population, which is the main factor also controlling the condos, because condos represent a lot of investors which actually rent them, right? Now, because the economy or the math doesn't work that well, so people are not ready to buy condos, or investors are not ready to come back to the condos. Now, most condos that are getting sold right now are getting absorbed by end users. That's a good point, right? Now, population growth, if we look into this, we had the very good population growth in 22, 23, 24 early part, but now since later part of 2024 and 2025, the population is not growing. And that's significantly playing role in our condo market. And employment, that's another factor. Employment was actually going negative in the first couple of quarters for this year, and then it will start going positive as per TD in the next little while, and that will support the condo market. So the condo market is bound to come back as per these slides, right? And this is condo completion, which means the new condos which are getting built. As you could see, we had a lot of new condos which were built in 23, 24. Lot of supply, right? This is a condo construction, actually. Condo construction reached the peak in 2024. Now we are building lesser and lesser condos. As we are not building new construction anymore, and actually in 2025, the new construction is now negative as compared to the last couple of years or last many years, and it will continue to be negative in the next little while. And that's actually going to support condo market, right? Now, Urbanation, which again I mentioned, that's a company that tracks new construction in GTA. As per them, 2024 was the lowest number of sales since 1996. For the last 30 years, we had lowest number of sales in 2024 for the new construction sales, right? How much lower? In 2024, the first uh, quarter was we only sold 10,916 condo apartments in 2024. Sorry, this is completion, my bad. So new condo completion was about 11,000 in the Q4 2024, which is very high. This means we were completing all those condo buildings which were sold in 2020, 2021, 2022, right? They are now getting near completion. We completed 11,000 condos in last part of 2024, which is a big record. In 2024, we overall completed about 30,000 units, which is 24% higher than 2023 when we completed about 24,000 units. And next year in 2025, we are also going to complete about 31,000 units because we are doing so much completions this year. So these are pumping up new construction supply in the market. And that's why the condo market is right now having too much supply, very little absorption. Because it's not only the supply is coming from resale, supply is also coming almost 30,000 units coming from new construction, which are getting completed. But this is going to change, right? Because the new condo starts, which means building new condo buildings, is all-time low. Now we are not building any new condos, right? We have seen 79% drop in Q1 2025 as compared to same period last year. And we are at 30 years low for the construction start, which means new construction is not happening anymore or it's happening very low, right? And sales wise, we are not selling new construction condos anymore. 22% lesser sales this year as compared to last year. Last year was not even a good year at all, right? So if we look into the number of sales of the new construction, as you could see this graph again from Urbanation, we had a very good number of sales for the last 3, 4 years, right? 2020, 2021, 2022, and so on, right? But 2024, we only had almost less than 5,000 homes, new construction. 2025, we may not even have half of that because we are not selling new condos. We are not doing construction for new condos. Come 4 years from 23, 24, 25, it means 27, 28, there won't be any supply. That's the time when the condo market will start booming again, right? That's the facts, right? Now, what to watch for? We need to watch, as I mentioned, next couple of months, we would watch how the sales activity happen, number of sales. I'm not concerned with the prices. I'm going to watch number of sales happening for next couple of months. That will indicate how the market is going to behave in long run. Interest rate cuts, if any, which always support the market, we'll definitely watch that. And trade deal whenever it happens. So these are the things we need to watch. Keep in mind, real estate is cyclical. What goes up comes down is very much applicable to real estate as well. And what comes down goes up again. So real estate is right now down, but it's definitely going to go up, right? It's just a matter of time. Sales are a leading indicator. That's what's happening. It's indicating that sales are getting better, and prices are a trailing indicator. Prices normally follow later, right? So that's what I want to mention in this. Again, just want to bring to your attention, there are few very good deals we have in our hands. Anybody interested, let us know. We have a assignment deal for a condo at Vaughan Mills. It's right at the Vaughan Mills, called Charisma Condos. This is a 970 square feet condo going for 700,000 with parking and locker included, brand new condo. It comes out to about $720 per square feet. Keep in mind, you cannot build anything for this price again, right? So the new construction, they can never sell a 900 square feet condo, or actually 970, which is almost close to a 1,000 square feet condo for $700,000. So this is a great deal for anybody looking for a good deal. Please approach us. Another deal we have right now in our hands, there is a bank sale. This is a CIBC bank sale we have in our hands. It's a 2-bedroom, 2-washroom condo at Square One going for 524,000. Parking is included, actually. It says zero, but we do have a parking, right? So this is another good deal. And if anybody is looking for a dream home, a high net worth home, this is another home we still have. There's a significant drop in price for this listing. We had it at 5 million. Now it's at 4.5 million in Oakville. It's 6 bedrooms, 8 washrooms with elevator. Beautiful home. Anybody looking to upgrade, please contact us. Again, any questions, please reach out to one of us and we would be happy to help. Okay, now we'll open the Q&A session. Anybody have any questions, please feel free to ask.
Maybe you can ask the mortgage brokers their opinion meanwhile.
Yes, let's do that. Before we open our Q&A session and people are getting ready, let's ask our mortgage brokers to come back and tell what do they think where the rates are going to be, right? So let's ask who's going to start, Bhavin or Kishore or Amit or Rajat. It's your stage.
Hey, Sam.
Yes. Yes,
I
Bhavin.
think as you said it very well there as well. Rates are going to be steady for this September session as well. It's not going to change.
Okay. So are you saying only for this like September, or you're saying for the whole year of 2025?
Just September. It's not going to have any effect, but they're still saying that another 25 cents at least by end of this year.
Okay. Okay, so Bhavin is saying that this year we may have another drop, but in September there won't be any further drop. That's what he's expecting. Great, thank you. Kishore?
I think I'd agree with Bob, and I think the cut will be either late this year or early next year because inflation in the US is still creeping up and ours is still going up and down. And so it's gonna like I said, and we're not too far off from pre-COVID rates, right? Like pre-COVID, when I looked at it, a 3-year fix was like a 339, 349. Right now you get it in high threes, low fours. So we're at best 50 basis points away on a fixed rate from a pre-COVID rate. So there's not a lot of distance to go.
Okay. Fair enough. So thank you, Kishore. So as per Kishore, there would be probably some drop, right? But we are not too far away from pre-pandemic rate. That's a good
Yeah.
look into it because, yes, everybody started comparing rates with 2021, 2022, or 20
I call them the honeymoon rates.
honeymoon rates. Yes. Those are not coming back. Right. Agreed. Agreed. Great. Uh, We do have, I think, Rajat also on the call. Uh, Rajat is another mortgage broker. We have here Rajat. What do you think?
Yes, Sam. So the same thing. I think there's gonna be no drops this year, but definitely next year is gonna be drop. But I wish there is gonna be drop this year.
Yeah, that's right. We all wish there are more drops. Again, that everybody
Yeah.
wants to have better rates, but Bank of Canada has different role to play. They are more worried about inflation, and they don't want to overheat the economy because economy for some reason has held up very strong still despite all what's happening noise from the south of the border or trade tariffs or whatever we call it, uncertainty. We are still holding up very well, and that's why they don't want to change the rate. And in fact, in US, the economy is heating. That's what they are saying, and that's why we cannot go too far away from them. Fair enough. So rates most probably wouldn't change much, and that's what RBC has said, right? So RBC is predicting there won't be much change, whereas TD is saying there would be some change. Again, we'll see which big bank is saying the right things. So, but we'll find out. Great. Any other questions now from the audience? You want to ask anything to our expert panel? Please feel free.
I wanted to, I don't know who will be able to answer this question. Like Mark Carney has announced that they're going to be doing some different type of housing and things like that. How will that affect the supply of the housing market?
Great. Very good question, Shiba. Thank you. So Mark Carney is saying we need to boost housing supply. It's not only Mark Carney, it's all over government. Everybody is saying we need more houses. In fact, CMSC, which is Canadian Mortgage Housing Corporation, came out with a study where they have said that we need to double the rate of construction for next 5 years till 2030 to keep the pace. That's how many houses we need in Canada. Yes, for a short term, it looks like we have oversupply, right? But that's because of other factors, because people don't want to buy, people are trying to hold, moving. A lot of youngsters or young generation or Gen Z, what we call them, they are sitting in their parents' home. They are not going out because of economic factors, but that's not normal. We need almost 500,000 homes extra built every year. And we cannot reach that target until unless government brings some drastic changes. And that's what Mark Carney is talking about. Ontario Premier Doug Ford is talking about the same thing. You must have heard that in news many times. That's why they have allowed or they have promoted. Now they are doing sixplex in Toronto, which means at every house, if there is availability or if there is viability, you can go up to 6 units, sixplex at every house, right? And that's because they want to promote housing construction and create more units for rentals, right? So that's what's happening all over. Now, when we say, hey, people don't have money, and again, I just want to touch this point again, we say our next generation cannot afford homes because they cannot have enough income, disposable income, or savings, or whatever. You know what? Who's funding all this Gen Z? It's Moms and Pops Bank of Canada, right? So parents are funding the youngsters. There's a lot of generational wealth which is getting transferred from the last generation to the new generation. And actually, the last generation has, because there's a lot of appreciation in their homes, the last generation has actually gathered a lot of money in their houses. They have a lot of money to unlock, and they are doing it to help their next generation. So that's why the market will still keep on going up. That's my take on it. Thank you, Shiba. Thank you for the question.
And to Shiba's point, I would like to add one thing. I read the statement and followed the news of Mark Carney's announcement, the
Mm.
$2 billion project that's focusing on affordable housing mainly. So it's not going to change the real estate market overall, generally speaking. Affordable housing, we don't even know how much, what price tag is affordable, as Sam said, for generation that is we're most concerned that they are not capable to purchase. So that's my point on it. Thank you.
Thank you. Thank you, Haji. Thank you for adding. Great. Any other questions from any other person? Looks like my session was very informative, or either it was so well explained that no one has any question, or it was so much confusion that no one wants to ask any question. I'm sorry.
Sam, I have a question actually.
Yes, Papin, go ahead.
Sam, you know how about a year ago when the government started allowing those garden suites, are
Yes.
you seeing any traction there? Are you seeing any clients or any have you seen any activity, or it's just talk and nothing's happening?
Again, I spoke about that they have allowed up to sixplex now. Last year, they allowed up to fourplex in every house in only Toronto. We are not talking about other areas. Now, one thing is, if you know, few years back, there was no second unit allowed in any house. They have stopped it, right? In early 90s or mid 90s, they allowed a legal basement apartment. Then they stopped in 95, 96.
Yeah.
For many years, you were not allowed to even have a second legal unit in your house,
Mm-hmm.
right? And that caused a lot of shortage of houses. So the government realized they have to change. So then they came up with this up to fourplex in every house last year, right? And with that, yes, there are a lot of people, a lot of clients I know who have actually gone and built at least 2 or 3 units extra in their house, right? And now they have bumped it up to sixplex, which the only way you can do is you can normally put maybe 2 units in the basement if there is enough space. You can even add another 1 or 2 units upstairs. If you're a two-story house, you can make them two separate units, right? And then other units you can always build in a garden suite. Yes, I have seen a couple of people, if especially in Markham, a lot of people are building those garden suites in Markham because Markham has a lot of houses which has detached garages in the back. And people are actually making a suite on top of the garage called garden suite. You can call them as well. And yes, some people are actually building garden suites in their backyard. If you have a big backyard, it's a good idea to put garden suites and have an extra income. So that's happening, Bhavin. Thank you.
Thank you, Sam.
Thank you. Great. Any other person have any questions on condo market? Because I still want to talk about condo a little bit more. Because as I said, condo market is a main sector in Toronto. Yes, if you're looking into houses or semi-detached houses or like townhouses, freehold segment, it's already heating up. Keep in mind the prices have not gone down very substantially in these. They've already almost reached the bottom. Almost reached the bottom. I would never say it's the bottom because we don't know yet, but we are very close there, right? As compared to condos, because condo is a main segment which is still suffering, right? So it is down and there's still more room to go down. And the reason I say it's there's room to go down because there is a lot of supply. It's still 7 months of supply. And still, as we know, and as I mentioned in our presentation, we are having another 30,000 units coming into the market this year from the new construction, almost everywhere in GTA. Not only Toronto, it's almost every suburb you go, you'll see new construction buildings everywhere, right? So we are having almost 31,000 new construction units this year, which will start slowing down next year onward. So currently there is a lot of supply, very little demand, and very little absorption. And that's why they are for a free fall. So that's why there are a lot of good opportunities. Now, if you have any of your kids or your youngsters, or you are youngster looking for your first home, this is an opportunity not to be missed. Sooner it will start getting like absorbed. As we said, in 26, there's a very little new construction buildings which will be completed. 27 onward, negligible, right? So the time is now, because when there's more supply, less demand, more sellers, less buyers, you can negotiate very well. You can pick up the best units, you can get the better units. Once it starts changing by 26 onward, there won't be much you can do, because then again, the sellers will start getting their wish, right? So keep that in mind. Thank you. And I just saw the comment from Haji saying condo units actually 60% of the supply in the market. Yes, that's right. So right now in our Toronto market supply, 60% of supply is condo units. That's a fact. Great. So I think everybody is happy with the questions so far. Nobody seems to have any more questions. So we would call it the end of the session for today. Thank you, everybody. Thank you for tuning in. I know people want to go out and enjoy the weather. It's beautiful out there before it starts getting hotter in the afternoon. Tomorrow is also very nice weather out there. So it's a nice weekend. A lot of our clients are actually, I know they are on vacation. So that's why we have a thin attendance today, being summer months. So we expect it to grow next month when the people come back. So far, enjoy your summer, enjoy your day out, and thank you for tuning in. Thank you, everybody.
Thank you, Sam.
And bye, Sam.
Thank you.
Thank you.
Thank you.
Thank you, Sam. Have a good day.
Same to you.
Thank you.
Bye-bye.